Hello and welcome to Focus IR. I am John Human. I'm very pleased to welcome back to the show Jacques Vaillancourt, President and CEO of Mineral and Financial Investments. How are you doing, Jacques?
I'm well, thank you, John. How are you?
Very well, thank you. Very well. Today we're going to talk about your first quarter update, which is very positive. I know you're not entirely happy with it, but the numbers look good at face value. Talk us through the results.
Well, it's an occupational ailment. I'm never terribly happy with our numbers. We can always do better. But we announced NAV of 29.25p per share. That's up 13.7% year over year. And that's for the first quarter period ending September 30th, 2025. And the reason I know it could have been better is that at the time of the period end, September 30th, one of our strategic investments at the time, Luca Mining, announced a financing, and the shares were over 60 cents, and the financing was done at 45. So that cost us about 2.23p per share of NAV. And just the point of reference, the shares at the time were 65, financing was at 45. We had to recognize 45 at period end. The shares are now over 70 as we speak. So they've completely bounced back, but it did penalize our quarterly results. And had they remained unchanged, our NAV would have been 31.5p for the period, or about up 22.4% year over year. So it's a decent quarter. As I said, I'm never overly satisfied with what we've achieved. We can always do better. And while I've got you just talking about Luca during the quarter continues to achieve what we had hoped when we made our initial investment in the company. Campo Morado, the mill, is achieving much better recoveries than it had in the past. They've increased copper production. And one of the issues that they started grappling with over the last 12 months was that mining yields were tons per day were a little erratic because of an aging mining fleet. And so they got rid of the contractor, hired a new one with new equipment, and productivity is up to expectations. So the mine's producing what they expect. They're feeding the mill, and the mill is producing more cash flow than they have in the past. So that's going well. The second asset of Luca Mining is a mine called Tahuehueto, and they finally completed over the course of the last 12 months the mill expansion from they were operating at 250 tons per day. They're now at 1,000 tons per day, which is outstanding because you have to bear in mind that the overall costs haven't changed, but you're running three times more tons of ore. 4 times more tons of ore and producing 4 times more gold than you did before with the same fixed costs. So the profitability at Tahuehueto is improving significantly. So those are the items with regards to Luca. The other big investment that sort of has changed the nature of our investment portfolio is one of our strategic investments called Golden Sun. Golden Sun Resources, it has finally completed its mill. The mill is now operating. It has the capacity to produce at about 400, and depends. The ball mill can operate at 500 tons per day, but there are a few pinch points. But say it's somewhere between 400 and 500 tons per day. And they've gotten it up to 350 tons per day, and they're gradually moving their way up. But during the course of September, October, there was a bit of a squeeze. They were operating at, some days at 50 tons per day, some days 250. Break even is about 200 tons per day. And they're now operating, as I said, over 300 in a normalized environment. I think still January is going to be a point of inflection. But because of the squeeze they were having with regards to getting the mill ramped up, which is perfectly normal, it happens with virtually every mill I've ever experienced. They were undercapitalized, so we had to provide some financing. We loaned them some money in exchange for some deferred gold contracts, which allowed us to buy gold at $1,750. And we can either take delivery of the physical at the mine gate, or we can take the financial equivalent. So just on that, we've made almost $1 million of gains on that financing. And so we have about 1,100 ounces of gold as part of our portfolio, and that represents about 19.9% of our NAV. Over the course of the next 12 months, that will be monetized as the mine gets up and running. So that will return, as I said, about well, in this case, it's about 2.4 million pounds worth of cash to our cash holding.
So, I mean, the gold position's incredibly interesting. You allude in the statement to the strength of the US dollar in the period, but I guess that's something you don't expect to continue necessarily, which is why you've got this gold.
I have more concerns about the U.S. dollars than most, and that's why we're heavily exposed to precious metals. There's an inverse relationship to the price of the U.S. dollar and commodity prices. As most commodities are denominated in U.S. dollars, U.S. dollar goes up, the price of the commodity normally comes down. As it turns out, over the last 6 months, U.S. dollar has gone up, and year over year, it's up over 8%. So that hurts us because we don't have that many investments in pound sterling. Most of our investments are denominated in either Canadian, Australian, or U.S. dollars, and that affects our performance. And that probably was an 8% headwind for us year over year. But I'm not as bullish as the market is on the USD. I think the market is a little incoherent. It expects / hopes that rates will come down. But every time Jay Powell has cut rates over the last 4 months, the yield for U.S. Treasuries has gone up in the marketplace. So the market's demanding higher yields despite the cuts in administered rates, which is incoherent with a market that seems to think the rates will be cut. So someone will be right. Normally the bond market's right.
Indeed, and this performance, it really does continue what has been a fantastic track record over 5 years, leaves you well ahead of benchmarks, and the outlook looks pretty strong too, given what you said about Luca and gold and sun. Where do you think the composition of the portfolio leaves you in terms of your anticipated outlook for both the sort of metals prices, the underlying metals prices, and the sort of the mining equities market, which has been challenging?
Well, I think by year end, we will have monetized a lot of these strategic investments, I think, over the next 12 months. So as we monetize them, we will be reinvesting them in more liquid and investments. So the nature of our investment portfolio will evolve pretty dramatically over the next 12 months, I expect. And from a shareholder standpoint, probably it will be perceived more positively because they will be much more liquid. We'll have a lot of cash, if I'm correct, and any liquidity we have will be invested in cautious and fairly liquid securities. So the nature of the business will change over the next 12 months.
I mean, your track record suggests that you've been right pretty often in recent years. So no, it sounds like a very sensible strategy for the coming year.
Yeah, you're only as good as your last call. At the moment, in the press release, it will appear that we're overweighted in our strategic portfolio. It's 64%, tactical is about 35%, and cash is about 1.2%. But if you include the gold, it's about our cash position is closer to 21%. And if you look at it on a commodity by commodity basis, precious metals are about 57.5% of that. 19.9% is gold bullion. Base metals is almost 33%, and food and energy is 8.7%. And I think we'll probably see a lift in base metals and the food and energy components of the portfolio over the next 12 months. That would be my sense of it. But we're always taking on board new data to understand where we should be setting course. And so far, knock wood, we've been fortunate.
Yeah, it's a great start to the year, and already sounds like it's getting better. Jack, thank you once again for speaking to us.